All right, good afternoon, friends. I hope you guys are well, and this is our weekly roundup. So this week we returned between ten and $15,000, depending on how many of the systematic trades you are participating in and which systematic trades you are in. This week, the systematic trades were a lot easier than last week, with all of the uncertainty about the government shutdown and ABCD. That created a lot of instability, even for our systematics. But this week we had a really nice, consistent week of returns, except for Monday. Monday was the most difficult day, and we did have to manage our Monday, two of our Monday systematic trades. Overall, we closed out a bunch of trades, as you can see, on Rigetti, on IBM, on APLD. The reality is that, I mean, the market is starting to digest a lot of these changes in policy. Essentially, what's happening is the market doesn't really know what is going to take place next. They're worried about the Fed. They're worried about rate cuts. They're worried about the economy. They're worried about the fact that economic data hasn't been coming out, and now labor data isn't going to come out. And so, they feel like the Fed is not in the best position to make a good choice about what they're going to do in February. I do think those fears are overblown because the reality is that the Fed has so many regional offices and they're constantly collecting data. The Fed was not impacted by the shutdown, so they have been collecting their own data and looking at, every aspect of manufacturing inflation, manufacturing prices, and manufacturing productivity. They're looking at, all different sectors of the economy. So I do think the Fed is going to have the data they need to make the decision that they're going to make. We did hear from a number of Fed presidents from different regions talking about the fact that they do think that it's not necessary that we have another rate cut. So right now, the rate cut, the Fed funds futures rate is telling us that we have 50-50 chance of getting a cut or not a cut. And the market just doesn't like that instability. Also, just all the political turmoil around Epstein and not Epstein and ABCD has also created a lot of instability. And one of the areas that probably even ourselves, we were made very good choices that last week we closed a lot of our crypto facing positions just because the reality is that Trump has been seen as the crypto president, and that created a lot of positive volatility in crypto markets. And so, we benefited from that. We benefited from the move on Ethereum. We benefited from proxies on Bitcoin. But of course, most recently, a lot of the crypto stocks have really struggled. And so things like CoreWeave have also, started to take some deeper pullbacks than what we had expected. But thankfully, we closed all of our positions because we didn't want to give back our gains anyhow. Let's just look at the core. I don't know. I thought I had CoreWeave up here, but so one of the things that I think is really important is that a big part of what's happening with crypto, the crypto sector right now, is that it is no longer acting as a hedge to the rest of the market. In fact, it's actually acting worse than the rest of the market. And I think part of that is because we have made a lot of what is crypto very, very, very normalized and centralized. And we've kind of changed the dynamic of what crypto was 10 years ago, which was like an anti-establishment currency that was supposed to move outside of centralized government controls. And once Donald Trump became the crypto president and it started to be streamlined as like for the masses, I think that a lot of the older crowd that have been, diehard Bitcoin holders from 2016 era until now, they're starting to dump their Bitcoin. There was a like a news thing that came out basically where they said that there are people who haven't opened their cold wallets for like 10 years that are now starting to open their cold wallets and dump their Bitcoin. So people aren't really impressed with how Bitcoin has operated the last year. And I think a lot of that just has to do with the whole grayscaling and ETFs and just basically making cryptocurrency and um, like a part, like almost like a normalized currency like the US dollar. So I think those who are trying to use it to be like, I don't want to say off grid because that's not, but being outside of like the normal social centers, that's no longer what it's doing. So thankfully we closed up all of our core weave positions, everything else last week. And then this week and you can even see Ethereum taking a massive move down. But thankfully, like, we were just trimming profits. You can see also with APLD, it came right back to our target. But again, once we started pushing on this zone, we were starting to give back profits. So we closed up a lot of APLD. We closed up some Rocket Lab. We closed a bunch of the quantum stocks, things like that. So we're just cleaning up more than anything else. Um, yeah, so you can see here that we also repositioned some of our holdings. So we had a bunch of positions on things like Hims and Oscar that were a little bit further out the money, but they had a lot of time on them. So we did reposition them in order to avoid just having to manage them at the last moment. We've brought those down and closer to the current price. We also had a really nice pin on AMD. We did signal to the group that whoever wanted to close the position, they could, because we did tap the 260, which was our target. So that did return 150%, which was $140 for those that took that trade. And yeah, so ANET, same thing. We were a little bit too far out the money. So we did reposition our December 19th trade in order to get it closer to the current price. But here you can see things like Rigetti. We did have trades all the way out to 2026 and 2027, but we decided that, we've been continually taking in more and more credit with those short positions. And this position originally started out costing us about $250. It's returned us well over $2,000. It is only showing a 100% return, and that's just because of how we have taken the profits off and then repositioned those shorts. It revalues the starting position, but the starting position was around $250, and now we closed it at close to $1,800. So there's not a lot to talk about this week regarding trades that we closed or signaled closing. I think that the trades that we were most active in this week were the systematic trades, just because those don't change. Monday's returns were pretty garbage. We took, depending on if you manage the trades or not, we did take two losses. We didn't take a full loss on this iron butterfly. We did manage that trade and we closed it earlier before we entered the second iron butterfly. But again, this day was really difficult. None of our, Monday, the trades weren't really hitting the way that we had hoped or expected. But then you can see in the rest of the week, the trades did come back with quite significant returns. And for the rest of the week, all of our iron butterflies were profitable. So we were, depending on how you manage them, if you took your scalps, then you were able to get out of both trades very profitably. For some of you, I know that you're not managing these trades at all. You just put them on and then leave them to expiration. And that's why in the spreadsheet here, I do keep the trades as value according to the end of day, unless I have signaled that you need to get out of the trade because it will not produce anything by holding it to the end of day. But as we see, you get really nice, consistent returns. And this helps those who are under PDT rules be able to participate without having to consistently use up their 3-day trades. But so for the week, again, depending on which systematic trades you participated in, you would have made between $10,000 and $15,000. The exact return for the portfolio was 16,500 or $470.52. So I don't know how you guys are balancing all of these positions, how long you're holding them, but if you are just taking the opening and closing orders as we're giving them in the group, then you would have still had a profitable week, in spite of the fact that for me personally, I found this week quite boring, mostly because it was very difficult to open new trades, and we were mostly just managing trades and closing some trades. But overall, we are kind of in this like limbo of wait and see. So I hope that everybody made money. If you have any questions about how the systematic trades work, please ask, because it is really important to make sure that your returns are reflecting the same returns as ours, and that we are all moving along on the same path. But I know for a lot of you, you guys have been trading these systematic trades for a very long time. Some of you have developed your own way of managing the trades or holding the trades or entering the trades in a way that like suits your portfolio better. And I love that for you guys. So I want people, to always think that yes, how we are trading them is just based on the statistical information, like what we found works best. But that doesn't mean that your knowledge, your information, your expertise can't allow you to improve the returns or even allow you to manage the trades in order to increase the returns week over week. But I hope you guys have a good weekend, and we will see you guys back on Monday. And hopefully this coming week, even though we do have quite a bit of economic data coming out, that we are all able to see some positive returns in the market, and we can break out of some of these negative downtrends. Yeah, I can show you what I mean. I don't know why TradingView keeps closing itself, but there you go. Yeah, you see APLD has broken out of its downward trend channel to the downside. You can see CoreWeave doing the same. Um, I did say previously that if CoreWeave were to break through this bottom range zone last week, that we could see it come all the way back into this S&D origin. We just moved straight through. This zone didn't provide any support to us. So that's what happens when you have a weak low. A weak low, like this, is where you have a low, you're coming down, you have a low, and it fails to put in a new substantive high. So normally you have to sweep that zone and create a new bottom before you retest to take out the highs. And again, this had the same exact failure, gave us a really clean rounding top, and now it's swept this entire zone. However, the only zone that exists below is this origin zone all the way back here. Do I want CoreWeave to get back to 50? No. Do I think it's possible? Very clearly, yes. If I'm just looking at the chart and I'm not thinking about any like personal feelings about crypto. So IWM also has this strong rounding top. So the expectation is it's probably going to come back into this fractal. So let's see if it can come back into this zone around the 227. Then we may be setting ourselves up for a run for the highs into end of year. But Rocket Lab, same thing, perfect upward trend channel. It should have used the center of the trend channel and its weekly trend line to be as a support to bounce up. Obviously, that failed. You can see that very clearly. So once we had this failure, then we did exit our positions. And now we've completely left the trend channel and come back into this basing zone here. But it does need to hold. And if it doesn't, then it is going to make a much more significant move back down. It will sweep this entire zone. So the expectation is that it could come back to the 36 area if it does if it continues to fail in here. So you can kind of see all the same things. Now, MongoDB has really, really strong and positive gamma. You can see that unlike the rest of the stock market, it's not failing as quickly. This is showing a lot of relative strength. So it may not come all the way back into this price gap. We're still holding our long positions, So yeah, that's for us is very positive. And just I think that MongoDB has been quite underrated in comparison to other stocks. And I think that in a season like this, it does help where other stocks have just had massive outperformance. People have to take profits. You cannot sit in something where the shares itself have had 300% returns and you just like watch the trade bleed to death. So Lilly has also been a massive outperformer. It has not cared, but of course, it was ranging for an exceedingly long time, all the way from the summer of 2024 until now. So again, this is just showing us that some stocks can demonstrate overall health, depending on their business performance and their business model, where in spite of the fact that the rest of the sector may be dragging behind. So we'll continue to do our analysis day over day, continue to try to get you guys into some of the best longer performing stocks. Um, yeah, but this week was really rough. I'm my personal strategy is, when there's a lot of clarity in what's happening in the markets, and of course, I want to significantly lean in. And when there is not a lot of clarity, then of course I want to take a bit of a step back. All right, friends. I hope you guys have a great weekend, and I will see you guys in the Discord on Monday. Bye for now.